Just one other really quick formality. Look, we're going to endeavour to give you as much information as possible, but please realise this is just general advice, and if you want any advice in relation to your particular circumstance, please speak to your trusted accountant or advisor, or again, take advantage of the initial complimentary meeting that Hood Sweeney provides to TICSA members. So with all those formalities out the way, let's really chat about what we're actually here today to speak about, which is the end of JobKeeper in Australia, which many of you still might be doing your final payments because you've got till tomorrow to do your final payment for JobKeeper. So as we speak, and what's next for businesses in your industry?
Yeah. Thanks, Priya. That's absolutely right. You know, some businesses are going through some, you know, prosperous times and some not so much so. Our sector is impacted in all different ways as we've gone through the last 12 months, but now particularly with JobKeeper ending, where to from now for JobKeeper, Priya and John?
Yeah, well, thanks, Kathy. It's not really just JobKeeper. With that finalising, most people will be aware there's actually a number of government support things that have now finished over the last few months. So JobKeeper was a great support, kept so many businesses open, but also people had the advantage of having the cash flow booster where the government paid your tax, and that sort of finished in September 2020. The SME loans through COVID with banks, again, stopping last year. And to be honest, it wasn't the easiest. I found a lot of our clients didn't actually find it that easy to get those loans, but they were still available from the government. Rent reduction policies, deferred debt repayment, general repayment agreements, and payroll relief. It's all kind of stopping in the next few months. So it's just, that's why this session today is really timely. We're also very conscious about the fact that not only has the government support stopped, but there are sort of a lot of things still out of control, out of your control as business owners currently. Obviously, tourism from overseas, it looks like it's still 2024. There were some comments that overseas tourism, overseas students and staffing not coming. And let's be honest, the domestic border closures that seem to happen every 5 to 10 minutes has really reduced consumer confidence in travelling nationally at the moment. So I guess today's session is really what is next for your business, and have you proactively planned for the government support stopping and debts needing to be repaid? As Kathy said, your industry has gone through so much. We understand that things like who rely on SA visitors like accommodation and hospitality and regional, they're doing well, but obviously things like tourism operators and city accommodation are feeling the opposite. So today's session is really about looking at the spectrum. Where do you sit on this spectrum? So thank you for doing the polls, and we might just have a look at those results. Yeah, we'll just get them up on the screen. So it's only me and Kathy and John being able to see them at the moment. So where we're sort of seeing is most people, where it's been really common is number one, where people are feeling really bad about their business, and then obviously 5 people are going okay, and then people are saying, some people on the session today are saying they're feeling great at 10. So there is a wide variety of spectrum, and we'll make sure we actually try and cover most of that. So I'll hand that over to John to sort of talk about the spectrum at a high level and some of the options, but we will go into detail today about some funding options, some tax options, some things that we recommend that you do, and also obviously if there are some grants and sort of product development. So that's really where today's session will be.
Great, thanks, Priya. So the idea about the poll is to just get you to think about your business and where you might be, and as we've all been saying, it's totally confidential. So when I put it together, I thought if we looked at the spectrum where things are sort of a bit critical, maybe terminal, 2 to 4 is at sort of risk, and sort of with 1 we had about 20% of the businesses online about in that sort of spectrum. And it's pretty broad, pretty much the same across the whole lot. 2 to 4, your businesses may be at risk. 5 to 7 sort of going okay, and then 8 to 10, you know, things are really going well, and you know, business is good. So if we go back and having a look at, you know, the people in the 1 sort of area, it really is time to be brutally honest about what's happening in your business, and really doing you know, asking those hard questions and an honest assessment. And to help with that, it's really thinking about what will change in your business, And one of the important things that we would encourage you to do is do a couple of cash flows on a couple of scenarios to see what's at risk, what funding you've got available, and really do you really want to continue trading, or is it that things aren't going to improve, and so you might decide, well, let's cut our losses and move and try and reinvent ourselves and do some other things. But with that, again, it's looking at what are the risks to your business, and what are the trigger points. And then with that, it really is seeking help and getting some external perspective about your options. And that might be through an accountant or some other trusted advisor that you have. And obviously what's happened with at the beginning of the year is that there's been some changes to the insolvency laws. And so there are some new processes that have come into effect from 1 January, and this is only really available for companies with less than $1 million. And there's an ability to restructure that debt, and it's a lot quicker and cheaper process than what was there previously. And you're seeing with some of the, I guess, the rent holidays, the ATO being, I guess, generous in their time and allowing people to pay. These things might be starting to tighten up again.
Which they are, John. Thanks. Yeah. No different tightening up.
And thanks for sharing that, John. And I'm sure if you're finding yourself in a similar situation, there is some real benefits in seeking some support, and particularly Hood Sweeney, or like John touched on, your accountant or financial planner. I'm sure, John, you can share, and Priya, like you look on it on a different lens and might be able to share some different perspective to businesses rather than when you're in your business looking at it yourself. Is that correct?
Yes, look, Kathy, that's really correct. I mean, it's really hard when you get caught up into the day-to-day operations of your business. You're stuck in there and you're in amongst the trees, so to speak, and you're just really just trying to keep afloat, and it's almost feeling like you're being dropped in the middle of the ocean and you're trying to swim one way and then the current takes you a different way. Something else happens with COVID or the vaccine. So then you start swimming another way. So it's really important to get some external perspective about what's happening generally in the business environment, but also specifically about your business. And it really is sort of taking that time to take an outward step and a bit of reflection. And what I'll talk about a little bit later is a bit about pandemic fatigue, where we're just constantly running and we're just sort of running out of energy. And so that's really important when you're assessing your options for your business going forward, is what are your energy levels like? Have you still got enough petrol in the tank to take it forward? Would you like to add something?
Yeah, no, I think it's just focusing on what you said about cash flow and really working out where you are sitting and being a bit brutally honest. It's really important, we're finding at the moment, for businesses to prepare for the future, really need to look at the next 6 to 12 months to determine the future without the government and debt deferral support. You really need to know where you're sitting, and that's really what John's sort of talking about today. We're at the moment working through clients with their current business model, looking at their cash flow and financing, and continue to focus on keeping costs down and seek advice from your trusted advisor. What we're finding is a lot of clients, like I've been speaking to a lot of clients, and they're going, no, business is going okay. And in their head, they're really looking at it and going, business is okay. But it's really critical at the moment to put everything down on paper and look at your next 6 to 12 months, look at and do a cash flow forecast and put it on paper, because obviously the results are often, we're finding, is actually really different to what the clients actually think they're sitting. And only from that can you really make some decisions, strategic decisions. Is the business going to grow? Do you need to shut it down? Do you need to change the model? Because obviously a lot of clients were, and you guys would be the same, you had to change your business model last year. You had to get creative. You had to think of different ways of doing business where possible. But now's the time to go, do you go back to your old business model, or do you keep the current business model? And not only is cash flow important, just to make some decisions and work out where you're sitting. Is it really time to pull the plug? Unfortunately, because some of our clients have had to make that decision, because when we do it, the next 6 to 12 months don't look as positive as they think it should be. If you are looking to get any future funding, and we'll talk a bit more about banking and stuff, but any banks at the moment are requiring cash flow forecasts, whether it's to get current money, increase your existing loan, And a lot of the government grants at the moment are requesting cash flow forecasts because the government and banks aren't really willing to give money at the moment to businesses that are just trying to stay alive. They want to make sure they're giving money to businesses that are growing. So the cash flow forecast is a document that they use. And I guess the other thing is we had a client who's did the document. Yep, let's do the cash flow forecast, did it. But we did find that they then put it in the drawer. So it's not just about doing a forecast, but yep, I've done it. The business is going to go okay, but you need to monitor and keep looking at that forecast and keep amending it as it's going. Being material, let's not worry about the little things, whether entertainment's $50 or $80, that doesn't matter. Just be material and realistic about what you're putting in the cash flow forecast and monitoring it on a regular basis and making sure it's always up to date and taking into account your fixed and variable costs and also those deferred debt repayments. They're coming back. Unfortunately, a lot of people are like the ATOs asking for them, starting to ask for their money back. Obviously, landlords are starting, the rent relief is sort of stopping now, and they want their money back too. So there's lots of people, those debt arrangements or debt deferrals are starting to come back, and you need to include them in your cash flow.
Thanks for highlighting that, Priya. That's actually a really good point, because if you haven't seen some of those costs in your cash flow forecast over the last 12 months, it's quickly just, easily forgotten about. But a lot of those repayments that have, or payments that have been paused or deferred, are coming back online. And perhaps the benefit of having an external advisor work through this process. You certainly don't have to do it alone, to give you a clearer perspective and a different perspective. Thanks for touching on that.
No worries.
So there's a couple of good, government organisations where you can get some information with respect to your position as an employer or an employee, which is sort of Fair Work, and they've got a lot of good information about COVID and how that might affect, your entitlements, etc. So that's a good place to have a look. Also, we've got ASIC in relation to companies and what may happen there, and then the Australian Financial Security Authority, AFSA. That's more for your sole traders and what your obligations there. So there are a couple of good sort of websites, and we'll hand those details out afterwards for you to have a look at and just get some general information, just to know where you stand.
Especially with staffing changes and things like that at the moment, those Fair Work roles, and people would have seen with the casual employees, a lot of that's changed recently. So if with JobKeeper ending and redundancies, it's really important that you get seek some advice in relation to that.
Absolutely. And for anybody of us who are in that, any of our members who are in that situation, wanting a bit more advice around that industrial relations side of things, Woolman Lawyers are a partner of ours, and they do offer a complimentary service advice line to all our members. And I'd encourage you to reach out to them, and I can, if you wish to, or connect with them, just let me know, flick me an email, and I'm more than happy to do an e-introduction there and connect you to that resource as well. So grants and financial assistance. What's is that where we want to head to next? Like, what's sort of really available for people?
Yeah, so I guess from a banking and funding point of view, obviously we're not financiers ourselves, but we have a finance team, and we do deal with the banks quite a bit. Depending on where you are at the spectrum, in terms of COVID at the moment, there are kind of three options that are available to you. If you're sort of at the risk, at risk stage, or you're going okay and you're looking for some short-term funding, cash flow lending is a short-term solution to fill the gap at the moment. This usually gets done pretty quick, but you will need bank statements and detailed cash flow forecasts. And usually when you go speak to the finances about this cash flow lending, they'll be able to make a determination pretty quick to assist. Usually, again, like I said before, unfortunately, if you're looking for money to keep the business alive, you probably won't be granted that money through this sort of option. But if you are developing or going okay, then pretty positive to get a short-term loan. The other thing to be aware of is most people last year, we had that SME recovery loan scheme, which, like I said, it wasn't the easiest thing to get, but the government has come out now and they've given a phase 2 of this, and it is open to eligible borrowers until 30th of June 2021. So there's the phase 2. This scheme's open to SMEs with a turnover of up to 250 million, and we're recipients of JobKeeper 3. So it's something to think about and speak to your banks. Loans backed by the scheme will be available through participating lenders, and the decision to get these approved will be by those same lenders. The idea is that theoretically, these loans by the government, will, by banks, will be easier to get as the government guarantees 80% of the loan, and lenders are allowed to offer borrowers a repayment holiday of up to 24 months. However, through our experience, you will still need to apply. You do need to make sure all your statutory obligations are up to date. And again, they will request probably a forecast in your last few years of tax returns. Unlike the cash flow lending, which only looks at the future, this one also looks at your previous tax history and things like that. And just one other one to be aware of is COVID relief versus hardship in the banks currently. So they are two different segments of the bank. A lot of our clients, and probably a lot of you guys last year when COVID hit in March, you probably spoke to your banks about getting some deferrals, about repayments and things like that. The banks were pretty lenient. Most banks were pretty lenient about that. And they gave you till September and October 20 to do this. When this ended, a lot of banks contacted those members and sort of said, listen, has your industry recovered? And do you need further deferral? Unfortunately, now that's sort of come to an end. And with a couple of our clients, unfortunately, because they couldn't service the loan, were actually told to move banks because the banks didn't want to deal with them. But the other thing is to have a think about now and have some honest conversations about your bank about moving from COVID relief to the hardship section potentially. Look, there are consequences of doing that, and it'd probably be best to speak to your bank or to see what that means for you. But it does mean that they're not going to put you to like stop dealing with you if you can't service your loan. They want to talk to you about what's the necessary documentation and how's the next 6 to 12 months looking. Just be aware that hardship is different to COVID. That's all sort of general advice. And what the main thing we'd recommend is, and I don't want to say, I want to make sure I'm a bit conscious how I say this, but the idea is to be really honest with your bankers right now. Like, don't just think it's all going to go away. Have some honest conversations. We have had some success with some clients not being moved, but we've had to have some pretty tough, honest conversations with the banks, and they're open to it if you're willing to have the conversation. But obviously, you need to your personal circumstances do come into play.
Yeah. And in relation to the grants, look, there've been quite a few that have been out there of recent. There was the Tourism Industry Development Fund, which closed a couple of weeks ago. There's still the Nature-Based Tourism Fund that's open. I think the voucher scheme to register for the vouchers for business was actually just shut yesterday. So that there are many ones that come up and around in relation to funded by the federal and state government. So it's just being aware of those and being prepared. But again, it's looking, some may be a one-for-one cash. So you'll get $1 from the government, and you'll need to put in $1, or it might be you'll have to contribute 30%, or it may be more in relation to getting advice or services. So it's just being aware that they're out there, and depending on what you want as well. So it may be in relation to assistance with labour or employees. Or then again, if you're looking to do some infrastructure funding, there might be some stuff there. But again, it's looking to see what's available at the time. And with any of those sort of expansionary things, and what we've seen in the past is once it gets over a certain level, you will need to put in a business case. So again, it's that you've actually given it some thought about why you want to do it, and that the numbers sort of stack up. Because what they don't want to see is giving grants to businesses or operations and really funding white elephants, so that they don't have the funding to actually complete. And so the government sort of left with a bit of egg on their face by doing that. So they are quite strict in relation to that.
No, thanks, John. So we're now looking at potentially, so we've talked about a bit about funding, we've talked a little bit about some of the grants available, and we've talked about why cash flow is important. I'm going to put my accounting hat on quickly and just talk about some of the tax consequences. And I'm sorry, I hope you guys still stay on the line, but it is important to sort of mention that. Look, I think it's something to be aware of is even if your business is going okay, or whether you are having some cash flow issues, whether you're going to do tax planning at the moment and take advantage of some of the growth that you're doing, or whether you're trying to do a 6 to 12 month forecast and you're trying to make sure you put in your tax payments, especially some of the deferred payments, I think it's important just to sort of think about some things. Firstly, the government's obviously given a lot of us in the industry at the moment certain income. So first of all, the state government small business grants, the 10K or the 3K, just to be aware that this is actually considered taxable income and you will need to pay tax on this. So something to think about when you're doing your forecasting and your cash flows. JobKeeper payments received for each round are taxable payments, and obviously tax needs to be made on these payments. So just to be aware of that, just don't think that that was free money from the government. And also cash flow booster. That was actually not considered taxable income. So for a lot of you guys, when you were paying your wages last year, the government gave you either 10 or 100 grand worth of wages. They paid you tax on the wages. That wasn't actually considered taxable income, so you don't actually have to include that in your tax returns this year. Just another thing for those business owners who currently run their business through a trust or a company, and they made a loss last year in 2020, or they think they're going to make a loss in 2021 financial year. Please be aware that these can be carried forward, these losses. You can't get any benefit in the current year, but when you make profits down the track, assuming you've got the same business and the same current ownership, you can actually offset those losses using from your profits down the track. The instant asset write-off rules, they finished in October 2020. They're now considered temporary full expensing rules. And for those that, just as a reminder, basically what that meant was last year, if you bought something under 150,000, you could claim it outright. You didn't have to put it on the depreciation schedule. Now, any assets that you buy between 6th of October 2020 to 30th of June 2022. So these are people, if you're looking in the growth phase or trying to do some work on your business, you can actually claim these outright, the business portion as a deduction. So that's really useful if you're thinking of doing some work around your business. And just a reminder, payroll tax waiver is actually still in place. I know I said it was about to stop, but it will be available up to June 2021. So anyone who's those businesses with wages up to 4 million, they still don't have to pay payroll tax, the last month being May 2021. So just some things to think about from a tax perspective in that space.
And you know, with that in mind, we've got to remember that sort of tax is calculated on profit, and what we need to be aware of is that we might have actually spent the cash, and so we need to be thinking about, you know, we don't want a horrible bill at the end of the year we don't have any money. So again, it's being able to have the conversations and, you know, potentially the ability to put in repayment plans if needed with the tax office if that's there.
I might just mention this job maker scheme too. Just one other thing. This is for those people who you may not have used it already because you're on JobKeeper, but just a reminder about the job maker hiring credit scheme that the government's put out. Like for a lot of people who are on JobKeeper, they haven't even thought about it or haven't utilised it because you can't do job maker and JobKeeper. However, if you're in a growth phase of your business and you've been on JobKeeper, but you want to hire additional employees now going down the track, it may be worth thinking to determining if you're actually an eligible employer for this. And if you are, you will need to register on the business portal, or your tax advisor or your BAS agent can register for you. The idea of this is it's basically the idea of it is the government's actually trying to incentivise businesses to employ additional young job seekers. And I'll be honest, I didn't really like the definition of young because I realise I'm not young anymore, but it's 16 to 35 years. Eligible employers can access this scheme for each additional employee they hire between 7th of October 2020 and 6th of October 2021. And unlike JobKeeper, where you sort of basically paid your staff wages, you don't actually have to pass these payments that the government gives you to your employees. It's basically assisting you with the cost of hiring these staff members. And depending on the age of the employee, it's about $100 a week or $200 a week. So something to think about. The criteria is pretty strict, a bit like JobKeeper. You have to make sure payments are done by a certain date. But something to think about now that JobKeeper's stopped and you need to hire some additional employees into your business if you're sort of growing, have a look at the job maker hiring credit scheme.
Yeah, I appreciate you sharing that one, Priya, particularly with, like you touched on, I had a giggle, but that age band as well is what's deemed young. But honestly, that is quite a workable and broad category in terms of that age. category. Sadly, I just miss out. But anyway,
I
no, but I
totally
appreciate you sharing that because it is a good incentive and perhaps an option, depending on what state your business is at. It could be beneficial.
Excellent.
Look, and another really thing to look at is really looking at who your target market is, who you're trying to attract as your customers in your business, and are they sort of still relevant? Do we need to change that? And hence sort of changing, and there's been a lot of, I hate to use the word pivot because that seemed to be the word last year, but being flexible and looking at, you can look at this two ways. You can look at it as a big sort of crisis and focus on the negatives, or you can see potential opportunities there. And as we've seen with the poll there, there's a broad spectrum, and there's a lot of people actually going quite well and have been able to realign their model and who they're servicing. And with that, it's looking for the opportunities. And I guess one of the things that I sort of drilling into people is you get what you focus on. So if you're focusing on the negatives and all you're hearing is this negative noise, that's what you'll see. But if you start looking at sort of positives, then you can see the opportunities there. And so that's looking at new markets, looking at potentially new customers, new product lines or new offerings, or how you can serve your customers better, and looking at that sort of product development. Or I know we've got some people here that are in the accommodation sort of area, and whether they need to increase capacity. And again, if we're looking at expansion, have we got the right capabilities and skills? Whilst we're looking at potentially some businesses maybe getting some new staff on board, have they got the right skills or capabilities? So do we need to look at some internal training, or looking at the skills that you as a business owner have, particularly if you're growing? Are those skills relevant, or do we need to seek or get help from outside to fill in some of those knowledge gaps or those skills gaps? And I know TICSA do a great sort of auditing program, a few other bits and pieces. So Kathy, it'd be good to hear what you guys have to offer to increase the capability of some of your members there.
Yeah, absolutely, and we can share that with people offline as well. A couple of questions I thought that I might just quickly take the opportunity to pop up and ask you guys. Just going back to a JobMaker, Priya, what detail can you share with us on JobMaker? Is it for full-time? What does the employment conditions, can it be casual, part-time, or is it really more for that full-time capacity?
No, it can be actually permanent, casual, or fixed term basis. They just have to be deemed to be eligible. Employees need to be deemed to be eligible. And if I just quickly run through the eligibility criteria, obviously they have to be that certain age, between 16 to 35 at the time their employment started. They must have worked with being paid for at least 20 paid hours per week on average for the first time the individual was employed during the JobMaker period. So that's why I said payments and the dates are quite strict. Commenced their employment between 7th of October and 6th of October 2021, and they should have received job seeker payment, youth allowance, or parenting payment for at least 28 consecutive days within the 84 days prior to starting employment. And they need to be in their first year of employment with that employer. They can't be like people you've got rid of in the past and re-put in. They're first-time employers, and they must be employed in the period that the employer is claiming for them. So sure, there are some bit of strict criteria, but just going back to your question, it doesn't need to be casual or fixed term, or it can be any permanent, casual or fixed term.
Absolutely, and we can see obviously the movement of trying to shift people who might have previously been on another type of an allowance support from the government. So
encourage that you to hire those people, but it is something to think about, because obviously if you're growing, getting a little bit of extra cash from the government, either 200 if you're hiring people between 16 to 29, and if you're hiring people between 30 to 35, getting an extra $100 a week is always helpful from a cash flow point of view.
Yeah, absolutely. Anything is helpful.
At the moment,
yeah, fabulous. And a quick question that's popped up as well, Grant, around grants. John, Is there, I mean, I know we've got the Tourism Industry Development Fund grant, and that ends in March next year. And we've had various other grants. Do you know of anything specific to a new, like someone starting a new business model, still in tourism, but do you know of any sort of specific grants around, you know, people establishing new business?
Look, there's one that's about to come up in relation to mentoring for Indigenous business owners. It's just about applications to open up. Perhaps if I could take that one on notice, there are some mentoring programs around, but as for the cash side of things, I think that's sort of quietened down for the moment, apart from the nature-based tourism one.
Yep.
So again, it depends on the area, and they might be able to get funding through you know, perhaps even local councils and things like that. So there are not only just the federal and state, but also the local government might be available. And again, they're also looking for tourism events as well. Yep. So as in a region, you might be able to bandy together to then be able to put something on there. So there's some funding there available for that as well.
Sure. Thanks, John. What I might do is, for the couple of people who've asked those questions, I'll just do some offline introductions, one to John around the grant side of things, and one to Priya as well. So if you've got any more queries, you're most welcome to connect directly and tap into their knowledge there. Fabulous. That's
I think the only other thing we wanted to mention, Kathy, is just a bit about some just mental health stuff too, if that's all right, just because obviously that's, as John said at the beginning, pandemic fatigue, doesn't matter what industry you're in. I think we all felt it or feeling it right now. So
absolutely,
I think it's just important to talk a little bit about that, if that's okay.
Absolutely, and appreciate you sharing that all. Yeah, that pandemic fatigue is a term we're going to see definitely start popping up in our language as we move more through this year and beyond. But it's really important to share with people. Not only are there external resources in professional for financial services like yourselves, but other professional services available in mental health wellbeing to support you as well. So yeah, far away.
Yeah, so look, I guess it's really important to look after yourself during this period. And as we said, it's that constant grind, and it's important to get some periods of rest and sometimes the ability to get away from the business, even for a couple of days, just to recharge your batteries. And as I said, you know, the pandemic, you know, fatigue, it's constant battles with the uncertainty. And, you know, when we're preparing this talk, when we're looking, you know, 6 months in the future on Thursday, everything was looking good. Everybody was going to be vaccinated at least once. And now that's all changed. And so it's that uncertainty and there's feelings of concern and anxiety. So, you know, that can wear you down. So again, you know, support what Kathy says about, you know, speaking to a trusted friend or a family member, or seeking some expert advice, you know, even to your doctor or accountant, or even going to a psychologist. You know, there are other, you know, specialist organisations like Lifeline or Beyond Blue, and really sort of just sometimes just sharing and having a conversation actually just puts it into perspective and brings it down and actually relieves some of that anxiety. And when I look at, you know, some 5 key activities for healthy wellbeing, you know, we can all do these and count them on one hand. It's trying to do each of these each day. Is perhaps doing something sort of, you know, some physical exercise, get those endorphins going. You know, looking for an achievement to do. So it's something that you can say that I did today, whether it's, you know, some sort of task that would give you a sense of achievement. It might be a phone call that you've been putting off, but at least sort of ticking that off. Rewarding yourself or doing something pleasurable. So that might be, you know, sitting down, watching your favourite TV show, or just making time in the afternoon and sit down and have a nice cup of tea and just really enjoying that. Again, the social aspect, because I mean, a lot of us are now, you know, reconnecting with people, but again, staying in contact with people. And really the other sort of last one is about reflecting on something to be grateful for in the day, or something that's made you smile. So it might be as simple as, you know, getting the best park in the supermarket right out the front, or seeing, you know, a beautiful flower, or just something funny happening in the day, but just taking some pause to reflect and just have a private little chuckle about that to yourself. And we are, even though things are pretty bad here, they're worse overseas. And so we sometimes forget how lucky we are living in South Australia and even Australia as well. So there's a lot to be grateful for.
Yeah, thanks for sharing on that, John. And something, I'll just touch off the cuff as well is not only I know I've experienced feelings of overwhelm over the last 12 months as well, but we're business owners and you're in the depth of running your business, but you've got your staff as well. So, and you never know what your staff are presenting to you on any day and what happens behind closed doors. So, you know what, it's just that simple smile and actually, how are you going today? Are you, and it's just that simple connection and saying hi, you just might make someone's day.
Yep. Yeah, just a simple act like that will. And if you notice someone's not feeling well, ask them, because again, it's
we're all in the same boat.
correct.
Absolutely. Oh, that's fabulous. Well, guys, if anybody's got any questions, this is the time I'd love to open up the floor. Anything specific to John and Priya, you're welcome to pop it in the group chat. Post this session, I will also send out an email. We will have a recording of today's session, as well as some resources from Hood Sweeney, and the contact details there for if you wanted to get in touch. They're so generous in offering a 1-hour complimentary consultation to any one of their service lines, so it doesn't have to be specifically, accounting. As Priya and John have touched on, they have such a broad range of service lines that are available. It could be performance coaching, so it could be technology on and how to improve technology within your business as well. So that complimentary consultation is not just specifically if you're wanting to work on the financial planning or accounting side of your business as well, but please, it's there to be used. So please make sure you do take advantage of that opportunity just to get some trusted advice and maybe another perspective. So I'll connect you all with that with an email afterwards as well.
And Kathy, it might be just worth just one word. I mean, I think John's got a really good way, just a good thing about options. I might just pass that over to John, but just as in the conclusion thing, because it's actually a really good way of thinking about things.
So at the moment, everybody's got a lot of options, and it's really, and what I've seen in the past with businesses sometimes is that they get overwhelmed and they become a bit of an ostrich. They put their head in the sand and they don't want to, face reality, and so they hide from it. And so I've sort of just developed the word to think about as a sort of a passing sort of comment being shop. And really that stands for, seeking, the S&H says seek help. So it's really getting the right team around you, no matter where you are on that spectrum, what's happening in your business, to provide you with the skills and answers in the areas that you may not feel comfortable or weak or getting that external perspective. Again, always for options. So again, looking at the options around for your business, and there are a lot of them there. And the more time you sort of spend thinking about them, the more you'll come out and see them there. And the P is for planning. So it's really important to develop a plan. If we know where we want to go, it's a lot easier to get there. And it might be that there are a couple of plans because of a couple of different scenarios. What if this happens, or what if this happens? So what I've found is that it allows you've done the pre-thinking. So when things do happen, you can actually take action straight away. And that's the important thing, is taking action and moving forward from there.
Absolutely. Thanks for sharing that, John. That's really insightful and something quite tangible we can take away, because you are right, there are so many options available and it can be pretty overwhelming as well. Before we
send through, Kathy, at the end is just a bit of a summary of, depending on where you feel, because everyone obviously, we covered a few things of different options depending on where you're on the spectrum, but really highlighting where you are on the spectrum and what are the options. It's a bit of a flow chart, so we'll send that through.
Yeah, thank you. That would be great. And I'll include that then to all you guys on the email. Like Priya said, we've got this spectrum flow chart and it helps you identify perhaps where you are and perhaps some of those actions that you need to be looking at as well. So before we just wrap up, just one last question that's come through there from Danielle. I'm not quite sure, John, if you're privy to that detail of the travel agent and tour arranger grant. I'm not, Danielle, I'm not specific on this actual detail either. I don't have the specific knowledge, but I certainly can get it for you. John, would you be privy to that detail of when that second round would be open?
No.
No, that's okay.
But
great question. And Danielle, just if you could park that with me and I'll get back to you with some more detail on that one for you as well. Thanks, guys. I really appreciate everybody joining us today, as well as John and Priya. One thing I've taken away is perspective. It's really important to get perspective, and I think that's really hard when we are wearing so many hats in running a business, and that does happen to everybody. So it's just understanding there's resources out there to help you gain that perspective. One thing I've certainly learned a lot of today is really that importance of having a cash flow forecast for the next 4 to 6 months. And whilst we probably all got it in our heads, actually let's get it down on paper as well, because that could look vastly different once you write things down. It's like writing down that Christmas card list, you know, or the Christmas present list. You have it in your head, but then once you put it down, you're like, holy moly, that's a lot more than what I thought. So yeah, that benefit of that cash flow forecast, short, immediate term, the next 6 months, and let's get that on paper. I will definitely, as I said, connect you with some resources if you need some support with that. And again, Tika say we're here to help. So feel free to please get in touch with us as well. I've seen a few people, just as we close, that would like some detail on that travel agent and tour arranger grant. Park it with me, guys. I've made note of all your details. And I'll let you know more about that as well. So thank you once again. Appreciate everybody joining. Really appreciate your time, John and Priya, today. And yeah, we'll be in touch soon. Have a great day, everybody.
Thanks, everyone. It's great to see you guys again.
See you. Bye.
Bye.